Okay, we should be okay now. I think you'll be able to see my screen. If everything is working fine, I'll begin. Great. I really apologize. We had some difficulty here. I think there was a problem with the connection, internet connection, but everything seems to be fine. Let me begin. And first of all, I want to thank you for coming and bearing with us in this problem here. We had a little, delay, but my name is Primo. I am the president and founder of SpecialistTrading.com. For those of you who are unfamiliar with my website, we are an educational website. Even though we provide our members and our students with signals and with strategies, we're really an educational website where we try to teach you how to trade. Just to give you a little background about myself, I have been actively trading for nearly 36 years now. I started out on the floor of the Pacific Stock Exchange. I was on the trading floor for 16 years, and 9 of those years I was a specialist for Donaldson, Lufkin, and Jenrette. So that's where we get the name Specialist Trading. For those of you who are unaware, a specialist is a person who makes the markets in the stocks so that you can come up and buy or sell from that specialist. So I really traded through a lot of different environments. I've just about seen everything and anything. I traded through the crash of 1987. And I've traded through a lot of different other environments of the markets going up. And the best thing about what I learned trading on the floor is that everything I learned and everything that got me going in my trading can easily, very easily be transferred over onto the Forex markets. So that's what I'm going to share with you today, a simple way to trade with the trend. That's the topic for this week's special webinars, a simple way to trade with the trend. And you're going to see how simple it is without the aid of watching tons of indicators, without the aid of being in some trading room or chat room or trying to figure out what the trend is. I'm going to show you how to actually do it yourself. But before we begin, as always, I ask that you please take a moment to view our disclaimer. We're required to show you this. I'm going to show you some performance results using this particular technique, but please remember that we can in no way guarantee that any of the results will be repeated in the future. So as you're taking a moment to view our disclaimer, I like to bring this up a lot of times in our presentations because I teach a little bit differently from others. I really, am honest about my trading. As I've said in the past, I struggled for the first year or so as I was a specialist on the floor. I couldn't seem to get things going. It wasn't until a few specialists on the floor took me under their wing and explained to me that the real meaning of being a specialist in trading is to keep things as simple as possible, not to overcomplicate your trading. And I think this is why so many traders, especially Forex traders, have a difficult time, is because they overcomplicate things. They really, are involved in far too many things trying to discern whether they should buy or sell, what currency pair they should be involved in. If you keep things as simple as possible, I really believe you'll get on that road to consistency. This is what they taught me, and this is what changed my way of trading around, and this is what I try to instill in all my students. So my goal at Specialist Trading is to teach you, once again, not to make your trades for you and to tell you what to do, but to teach you how to trade with the specialist edge. And this is, we have a number of students who can attest to this, who had very difficult time trading, who have now turned their way of trading around, who are now on that road to consistency so they can begin to see this consistency in the trading the same way I saw it as well. All right, so that's what we're going to talk about today. And for all the people that want to have more information about what we teach and what we do at Specialist Trading, FX Street has provided us with a microsite. You can go to, this is the link as you see here, but it's kind of long. So what we've done is we shortened it for you right here. You can simply copy this link right here, and it will take you to a microsite that gives you much more information. So if you have any questions regarding what we do at Specialist Trading, the strategies we have, some of our results, you can go to that link, and it'll basically take you to this page right here. You can see it goes a little bit more information about myself as a bio, and also you can click on this here for course descriptions. All right, so here's what you're going to learn today. We started a little bit late, but don't worry, I'm going to go through everything. I'm not going to cut anything out, and it's not going to be a real long presentation, so we'll have plenty of time to go over everything. I'm going to give you 2 edges. Okay, the first edge is a proprietary indicator. This is a simple indicator that you can just about find on every charting software package. It's very basic, it's very simple, and you can just plot it, and it'll right away, if you know how to use it correctly, tell you what the trend is. And then I'm going to give you the second edge, which are basically 2 entry techniques. Once you know what the edge is, we're going to show you how to enter in this trend. Okay, so it's a really great way to trade with the trend. And I'm going to show you numerous chart examples. Now in the beginning, I'm going to show you some older chart examples. I know a lot of times people hate to go to presentations where you'll find an old chart, maybe a year or two old, and you'll say, well, how do I know that this really works in real time? Well, I'm going to start out by sharing with you some older chart examples just for educational purposes so that you can really see how this works and get some really nice examples. But then I'll end the presentation with some current chart and some recent chart examples showing you how this technique was applied to many currency pairs just as early as just a couple of days ago or last week. Okay? And in different time frames as well. And then lastly, I think most importantly, I'll take questions and answers at the very end of the presentation. I know a lot of people like to ask questions once we're in the presentation, but it kind of tends to slow things down a bit. So please, if you have a question, just write it down or try to remember it, and I promise I'll get to it at the end. If anyone came in late or anyone decided to come back in, we had that little delay, and say you pop back in, just remember to ask a question at the very end, and I promise I'll get to it. If you happen to come up with a question once we've concluded, don't worry, I'm going to leave you with a phone number as well as an email address so that you can contact us, okay, and ask us any question you may have, all right? So thank you very much for writing those questions down. Why don't we begin? All right, so here's an older chart of the Australian dollar. Now, obviously, we can see that it's been in a nice uptrend, okay? This is what we're looking for. We want to trade with the trend. The odds are in our favor if we're trading with the trend as opposed to try and pick a top or a bottom. I know that's the way most people like to trade is because, I know myself personally, I tried to pick tops and bottoms, and it would work 9 times out of 10, but that 10th time, I would give everything back. So it's much more conducive to this consistency in your trading if you trade with the trend. The only problem is most people have a difficult time on finding out what the trend is, and we can always look back in hindsight the way we look back at this chart here and say, oh yes, it was in an uptrend. But it's hard to find out and to discern what the trend was as it's actually happening in real time. So how could we do that? And once we find the trend, we don't simply want to buy on breakouts or buy at the market because we think it's going higher. We have to have a little structure so that we can buy on pullbacks. Those are the areas in which the market sells off, as you can see right here. We had a nice little kind of sustained movement, kind of sideways, and then sold off. And then we sold off again. Then the market rallied, and then kind of went sideways to selling off. So these are all the opportune places in which you would like to purchase. Once again, this is easy to look back in hindsight because, it's very simple once you get a static chart that isn't moving in real time to say, oh yeah, I should have bought there or I should have sold here. How could we transfer by using a simple technique, a simple method, so that we could actually purchase and go long the Australian dollar in these sections right here, circled in green? Well, here's our first edge. Our proprietary indicator that we want to use that's going to help us find the trend is the DONCHIAN channels. This is a simple tool that's just about on every charting software package. If you don't have it, I would ask your software tech support to provide it for you. If not, there are many free sites that have DONCHIAN channels and you can check and use them. But they're a simple tool that really have 3 channels. And here's an example of how to use it trading uptrends. Okay, we're going to start with trading uptrends and then we'll show you how to use it trading downtrends. As you can see, these are the 3 channels. We have the top, the middle, and the bottom channel. And what you want to see is all 3 of these channels headed in the same type of upward direction if we're looking for uptrends. Now, they're not going to be in sync. Sometimes you'll see a real kind of nice sideways movement here and a long sustained sideways movement, and other times you'll see some of the other channels are going upward where one is going sideways. It doesn't matter. They don't have to be perfectly in sync tit for tat. We're not looking for that. What we're looking for is just that they're all going in the same direction. All right, so as you see here, all of these DONCHIAN channels are headed in the same upward direction. So this right away is telling you we're in an uptrend. That's all you need, okay? We don't need to worry about what the news is saying. We don't need to worry about what someone's saying in some chat room. This indicator is giving us a high probability that we're in an uptrend as long as all 3 channels are headed in the same direction. All right, so let's apply this now. How are we going to buy? Well, if we see that the price is somewhere trading upwards and then starts to sell off and touches the middle line or the middle channel, that's a buy zone. Okay? That's that simple. We're buying on these little sell-offs or pullbacks. And then price usually will take off again to the upside in this trend, and then it'll come back and touch that midline again. That's another buy zone, and then so on. Okay? So every time we get to that midline, we want to look for some type of buying opportunity. All right, so let's look at our chart again. This is the Australian dollar we were looking at. We've seen that in hindsight, this was in an uptrend, but how could we have taken advantage of this in real time? Well, we apply the structure, okay? These are the areas, the opportune areas where we would have liked to have gotten long the Australian dollar. We simply apply the DONCHIAN channels, as you can see, and every time we sold off back to the midline, it went right into these buy zones, okay, right here. And then price rallies again, sells off, touches the midline. The trend continues upward. It sells off, touches the midline. So as long as these DONCHIAN channels are all headed upwards, every time we sell off to touch that mid-red line, we're in some type of a buy zone. So do you see now how simple it is once you have the trend and using this indicator, how you can trade on those little pullbacks? Remember, we don't want to buy breakouts within the trend because many times they're called fake out breakouts. And we'll go up a little bit and then head straight down. What we want to do is wait for the price to sell off or pull back while all these three DONCHIAN channels are still headed higher. You see, they're still going in an upward direction, and then wait for it to get in the buy zone. All right, same principle works if we're looking to trade downtrends, okay? What we want to do is we want to see that all of these three DONCHIAN channels now are headed in the same downward direction, okay? We're not looking for upward direction. Since this is a downtrend, we're looking for all three to be headed in the same stair-step downward direction. They don't have to be perfectly in sync. In other words, when one goes down, one must go down on the same bar. Many times you'll see that the midline has a stair-step approach while the top line may be going sideways. That's okay. As long as it's coming from a previous high point, they're all headed in the lower direction. Once price is selling off and then it starts to bounce back or rally and touch the midline, this is a sell zone. Okay, the same way now we're looking for a pullback to the upside. So price would sell off, bounce back up, touch the midline. That's our sell zone. Doesn't mean we just simply sell at the market. We have to have a little bit more structure. I'll go into that in just a few minutes. But that's what we're looking for. We're looking for price to sell off and then come back and touch the midline. That's our sell zone. Okay? So let's look at an older chart in the Swiss franc. And obviously we're in a downtrend. Looking back in hindsight, it's easy to see in hindsight what you should have done. We should have looked for areas to go short on these little bounces right here, okay? But how could we have taken advantage of that in real time? It's really easy. I know a lot of educators like to look back and say, hey, oh, I would have shorted here, I would have shorted here, I would have bought here. But how could we have done that while the market is unfolding in real time? Well, we want to add the structure. Here are the DONCHIAN channels, once again, and they're all headed in the same downward direction, okay? Once we see that price bounces and touches that midline, we're in the sell zone, okay? Sometimes it goes above, sometimes it stops right at the midline. Either way, once it intersects that midline or just touches it, that's your sell zone. You see how simple this is? Remember I told you at the very beginning of the presentation, what turned my trading around, what my mentors taught me, and what I try to teach all my students is that the simpler you keep your method, the more or the higher probability you'll have for getting on that road to success or consistency. So this is the only thing we're looking for. We're just looking for this really nice consistency in trading trends. Excuse me. Now let's go on to our next edge. Now that we've found the trend and we know that we're looking for either an uptrend or a downtrend, how are we going to enter? Well, I'm going to give you two specific entry techniques. Here's the first one. This is our aggressive entry. This is for traders who want to get in right away. They have a little bit more capital so they can have a little higher risk tolerance here. But you want to buy or sell simply when price touches that mid-DONCHIAN channel. Okay, so once you find the trend and price has pulled back to that buy zone and just simply touched that midline, that's your key to enter. You're either going to enter at the market or you place a limit, but either way, this is an aggressive way of entering. Let's show you an older example here in the dollar-yen. All three DONCHIAN channels are headed upwards, so obviously we're in an uptrend. And once price comes and touches that midline, you simply buy at the market or you place a limit right here, and look what happens. The trend continues upward. Okay? Then price sells off again, but while the price is selling off, these DONCHIAN channels are still in an upward move, So once we touch the midline, that's your buy signal, you enter, and look what price does. Once again, it can't get any simpler than that. You're simply trading with the trend, and you're waiting for those pullbacks in the trend. And the DONCHIAN channels help you and tell you where to enter. Here's aggressive entry to the downside in the Swiss franc. Okay, all three DONCHIAN channels are headed lower in a stair-step direction. And if you're an aggressive trader, you're simply waiting for price to bounce and touch that midline, and that's where you enter, either at the market or you could place a limit right there. And the reason why we call this aggressive entry is because many times it'll touch, and look what happens. It doesn't go down right away. Many times it'll be sitting up here for a while. So this is for more aggressive traders, traders who have a little bit more capital for risk tolerance, because you may have to sit with this for a while, and it's not guaranteed that it's always going to go down. Many times it'll kind of hover here and then change trend. So this is for more advanced, experienced, and aggressive traders who have more capital to deal with this risk. But had you shorted here on this aggressive entry when price touched the midline, guess what? It would have gone lower. Here's another chance to go and get short, and another chance. All right, so that was edge number 2, our aggressive entry. What if we want to be more conservative? What we want to say, Steve, well, I don't feel comfortable. I kind of feel like I'm standing right in front of a speeding train. Just the price is going up and I'm shorting, or price is coming down and I'm selling. That's okay. We have a conservative entry approach. And what we want to do is we want to either buy or sell in an uptrend or a downtrend when a price bar is completely either above or below the mid-DONCHIAN channel. Okay? So let me show you what that looks like. Let's look at our example here on the euro dollar, an older chart. Now, here would be an aggressive entry where you would simply purchase right here. With the conservative entries, we're looking for a price bar to be completely below. As you see here, these two bars are completely below the midline. Excuse me. So you see, we want to see a bar or two that is not touching the midline at all. All three of these channels are still heading upwards, but we have bars that are totally below. These are our conservative entries. Okay? Now, the problem with conservative entries is you will not see as many of these as you would with the aggressive. Here was an aggressive entry that could have gotten you in very nicely to the euro. So you would have missed this if you were waiting for a conservative. But if you waited, here's your conservative bar right here, and you just would have simply bought either at the market or placed a limit at the close. The same technique works going short. Here's the older chart of the Australian dollar. Now, had you been an aggressive trader, you would have sold right here. But waiting for the conservative bars, you would have seen we have 3 or 4 bars totally above the midline, not touching, while all 3 channels are headed lower. So this was your more conservative entry, saying your risk is going to be less. Now, once price continued on its downtrend, you see here that we had an aggressive entry right here. But if you wanted to be conservative, you would have waited to find a bar that was entirely above the midline. And here's another one entirely above the midline, before the trend resumed lower. All right, so let's look at some more entry examples using these 2 different techniques, the aggressive and the conservative examples. These are older charts, and then we'll go and look at some more recent charts. Here's the Australian dollar. Obviously, we're in a nice uptrend. If you were an aggressive trader, you would have purchased right here once price came down and simply touched the midline. But if you were more conservative, you would have waited for a bar to be entirely below the midline, which is right here, and just simply purchase at the close, and the trend would have resumed. Here's a downtrend in the Swiss franc. If you're an aggressive trader looking to go short, you would have shorted right here, but look what you would have had to do. That's why we say this is aggressive for more experienced traders, because you would have had to sit through a week or 2 of price going even higher to sideways. If you're more conservative, you would have taken any of these conservative trades here, where you would have simply sold once a bar was completely above the midline. Then price finally did resume going lower because all 3 channels were telling you we're still in a downtrend. And then look what happened. We bounced again. An aggressive trader could have taken advantage here of going short. The more conservative traders would have used these bars to go short. Any one of these bars would have done. You could have used these to go short using the conservative entry. Here's the euro dollar, an older chart. All 3 channels are headed upwards, so we're in a buy trend. Okay? Here are some really nice conservative entries. All the bars are below the midline, and then the trend resumed. Then we sold off, and here's an aggressive entry. We never went below the midline, so this is an aggressive point. And then the trend resumed again. And then once again, another aggressive entry. Remember, I told you you're going to see far more aggressive entries than you would conservative, but you remember you have to have enough capital in your account, because many times you'll touch that midline and continue to go lower. So you have to be prepared. Here we have the British pound in a daily time frame. All three lines are headed lower. Even though we have a nice sideways line, it's coming from a higher place. So all three are in a lower directional move. You could have had an aggressive sell entry right here, or if you're more conservative, you would have waited for bars to be completely above the midline, as they are right here, and then trend finally resumed going lower. Now we're looking at daily bars. Here's a 60-minute chart of the British pound in a downtrend. Once again, even though we may have this sideways movement from time to time, remember, all that matters is where we were coming from in the last channel. And we were coming from a higher place, so this is still saying that we're going lower, a lower directional move. Here's an aggressive entry to go short on an hourly chart, and trend resumes. Here's another aggressive entry, but it would have been wiser to take this more conservative entry as the bar was completely above the midline. And then here's another conservative entry here before trend resumes lower. Here's a monthly chart to show you that this technique works in any direction and in any time frame. Here's a monthly chart of the euro-yen going all the way back to 2004. As you can see here, every time we touched the midline, we had a really nice aggressive entry. Once again, there were all aggressive entries here if you were an investor looking to hold on to long positions in the euro-yen. There were no conservative entries. So this is one thing you have to take into consideration prior to trading this technique. You have to decide, do I have enough money in my account? Can I personally trade this type of way where I just simply buy when price touches that midline? It's up to you. And here's a 4-hour chart of the dollar-yen, an older chart since the dollar-yen is actually heading upward now. But as you can see here, all the DONCHIAN channels are headed lower, so it's telling us right off the bat we're in a downtrend. So this means that if price bounces up and touches the midline, we can sell here aggressively, which we did 3 times in this 4-hour chart. All right, so let's look at some recent examples, okay? Those were just educational examples so that you can understand and see how the process works, okay? Let's show you some recent examples here. Here's a recent example in the euro dollar. This is a daily chart. This is going back to roughly about the beginning of the year from December on. We've been in an uptrend as all 3 DONCHIAN channels are headed higher. So this means you're only going to be looking to buy. Never try to sell short in an uptrend. Don't fight the trend. It's almost like trying to swim upstream. It doesn't pay. It may work once again 9 out of 10 times. It's that 10th time where you'll give everything back. It's much more conducive to having consistency in your trading if you simply trade with the trend. Now once again, this was all done without the aid of looking at any news reports, without the aid of any chat rooms or trading rooms. Only thing we're using is one indicator, which is the DONCHIAN channels, and then we're looking for the particular entry we want to use. Now going back to December, we see that we were in an uptrend. Price sold off and touched the midline. If you're an aggressive trader, you would have simply entered here and look what happened. Okay? Now once again, we're at the very beginning, just about a month ago of the year, we sold off and touched again. We had another aggressive entry. Now this one was a little harder to take because the minute you would have purchased, you would have had to sit through a week of really nothing happening until price decided to go back up. We had a really nice rally coming into this week. As you can see here, all of our members were alerted to buy signals in the euro just a week or so ago, last few days, because what happened? We had a nice conservative entry right here. We had 2 bars completely below. And the euro is starting to go up. It's not going straight up, but it is higher than where you would have purchased using any one of these techniques. So this is a pretty current, recent chart of the euro dollar on a daily time frame. What about if we look at a 60-minute chart? This is a 60-minute chart of the Canadian dollar starting at the just about the 3rd, which was, I believe, the 3rd or 4th, which is just Monday of the past week. We see here that the Canadian dollar on an hourly chart was in a downtrend. All 3 charts were headed lower, all 3 DONCHIAN channels. At these spots right here, you could have simply sold using an aggressive technique for entry. Once we got to this point here, this was your only chance to go short the Canadian dollar on an hourly time frame using the conservative entry. Okay? Here's another aggressive entry. At this point, we came up and touched, and this is where it doesn't work all the time because many times the trend will change. Now, at this point, had you shorted right here aggressively or shorted up here conservatively, you would have seen that the trend actually changed. This up move in the DONCHIAN channels, as well as right here, signal that they're not all 3 in sync anymore. It wasn't until this bottom line moved up that you had all three going upwards now. So this would have been a trade that was stopped out. But that's okay. You would have had 4 really nice winners in a row, 1 loser. And then at this point, we see right here we have a very nice conservative buy in the Canadian dollar, which was just, I believe, on the 11th or Monday of this past week. You could have gone long on an hourly time frame, the Canadian dollar right here at these levels using the conservative method. How about if we want to look at a 4-hour chart? I know a lot of Forex traders like to trade 4-hour charts. Okay. Well, we have a 4-hour chart of the Australian dollar. All 3 DONCHIAN channels are headed lower. So this is telling you that we should only be going short. Here was a really nice conservative bars here to go short. Any one of these bars you could have used to enter. And then look what happened. The Australian dollar sold off tremendously. Then we had a nice bounce. And someone here would have said, well, I think we're probably changing trend. We're going higher. But the DONCHIAN channels were saying, no, we're still going lower. They're all headed lower. So you would have had an aggressive entry right here. And look what happened. A nice 50 or 75 pip move to the downside. Another aggressive entry here, sell off. Another aggressive entry here, nothing much happened. In fact, you had a conservative entry here, and then the sell-off took place. And then right now, we have a sell mode. Now, as I looked last time, just prior to this presentation, the Australian dollar was headed higher, so I believe if you had sold here, you most likely would have been stopped out with a small loss. But that's okay. You would have had about 5 winning trades in a row. So whenever the trend changes, you'll get stopped out because these DONCHIAN channels will start to head higher. I just don't have live charts, so I don't know if you would have been stopped out or not using a 4-hour chart. Here's another 4-hour chart of the dollar-yen. This is going back to, once again, the last few weeks. As we see here, all 3 DONCHIAN channels have been headed higher. Here is a very nice aggressive buy signal. You could have taken advantage of it on the dollar-yen and look at the nice trend that continued. And then here is a very nice conservative entry on the 10th, which was, I believe, Sunday going into Monday of this week, telling you to get long, and you could have taken advantage of that as well. But see, these are signals that could have taken place 2-3 days ago. You could have taken advantage, as our members, all of our members did, who are using this particular technique, took advantage of going long the dollar-yen on a 4-hour chart. It's not that difficult if you know how to trade using these particular techniques and methods. Now, here's a weekly chart of the British pound, and it hasn't really unfolded yet. As you can see here, we have a very slow upward movement in the DONCHIAN channels. So even though they're very sideways, they're still headed upwards. So at this point, which was July last year on a weekly chart, we had all this signals telling you if you want to enter on a weekly basis, these are conservative entry points to enter the British pound. And you would have had a really nice entry about 600 or 700 pips on the British pound on the weekly time frame. Now we've sold off again. If you wanted to use an aggressive entry on a weekly chart, you could have entered here, but this is why we call it aggressive, because you would be in some type of a drawdown right now because you have not seen a rally take place as of yet in the British pound, and there still hasn't been a rally yet. But as we see here, all 3 DONCHIAN channels on a weekly basis are still and continue to head higher from their previous bar. So this is an open trade. If you want to monitor this technique on a weekly time frame, you can see that we are now in some type of buy zone using conservative entry approach, applying this to the weekly chart of the British pound. So you can monitor this and see how well this would have worked out on this particular trade. Now, let's recap, okay, before we go into any questions and answers. I share with you the proprietary indicator, which is our DONCHIAN channels. I know a lot of you may say, well, Steve, what is the setting on the DONCHIAN channels? We basically use our standard setting is a 21-period DONCHIAN channel. That's our standard setting, but we have ways in which to change that and to filter it, but that's solely for members. We show you ways in which to filter it for different environments, for different volatility levels. But the standard setting that you want to use, that all of these settings were, is a 21 period. Now, we gave you the other edge, which are true entry techniques. You can also use an aggressive as well as a conservative approach. And then we gave you numerous chart examples. Now, Some of the main things that come up, frequently asked questions before we go into the question and answer portion here. Steve, what about stop placement? I mean, where would I place my stop? Because once I get in, I know that they're not all 100% winners, even though a lot of these worked out tremendously. I still have to protect myself. So where would you place your stop? What about the exit points? A lot of these trends went up for a point and had a nice gain and then they stopped. Others continue to go higher and higher and higher. So where would I get out of these trades if I were a winner? What about time frames? You notice that we saw monthly charts, we saw daily, we saw 4-hour charts. Which are the best time frames to use? And can we increase the success rate? Is there a way to get even better gains out of these? Lastly, where do I get the DONCHIAN channels? These are the main questions that most people ask. But sadly, the only thing I can really share with you is that the DONCHIAN channels are a 21 period setting. You can get them from, you should be able to get them from your charting software, but everything else, all these questions are really reserved for our members of specialist trading, because this is where we teach you how to trade with these specific methods. Everything I've shared with you today is really reserved for members of specialist trading, but if you become a member, we'll tell you all about the exit points, all about the stop placement, all about how to squeeze more gains out of your profits. This is the homepage to my website. As you can see, I offer courses in not only E-mini and stock trading, but the Forex trading as well. Now, should you decide to become a member, here's what you see. Detailed instructions, such as you saw today. You saw how much I go into detail trying to really explain to you where to enter, how to really use these methodologies. We provide you with numerous Forex strategies, upwards of 10 strategies to trade the markets in different time frames and different risk parameters. I provide you also with weekly webinars, different webinars to upgrade your trading, to give you more tips and techniques to teach you how to trade on the next level. Everything is archived, so you can learn at your own pace. And then we also provide you with updates and signals. Now, even though we're an educational company, we do provide you with signals for educational purposes only, so that you can understand why you should be going long or why you should be going short. In fact, here are just a few examples of signals we provided our members with in the last few weeks or so. Now, on the 24th, we told all of our members to go long the euro dollar, and this quickly went up in the next 2 weeks about 240 pips. We provided our members with a signal on the 24th to enter into the euro dollar. Here's another we provided all our members with in the Australian dollar. This was on the 5th. This is just about a week ago. We told them to go short, and they quickly made about 116 pips in the next week. And then lastly, a real signal that we gave all of our members was to go long the euro-yen. This was on the 5th of December. We told all of our members, we gave them a buy signal the night before. We told them where to enter, where to place your stop, and where to use the standard generic exit. Had you used our more aggressive technique, which we teach you how to implement in the course, you would still be long the euro-yen right now for a gain of over 1,100 pips using our techniques. So remember, if you're interested in purchasing, we also sell individual courses. This is probably one of our best courses, strategy number 5, over 130% gains in the last 2 years. Now, for all the attendees today, for our FX Street attendees, we're dropping the price from $5.95 down to $3.45. This is a great strategy that we use. I personally use this, and this is some of the signals you just saw were strategy number 5 signals. This strategy trades with the trend. We never try to pick tops and bottoms in the trend. We simply try to pick those opportune places within the trend to enter long or short. Remember, all the FX Street members get a discounted price from $5.95 down to $3.45. And I'm sure, after seeing a few of those last examples I just showed you, that would have paid for the presentation. Okay, and remember, if you want any more information about specialist trading, simply go to the microsite. FX Street is provided for you. This is the link right here, and you can get more information once again, and everything will be there. Okay, we are at the question and answer portion. Thank you for waiting, and I'm sorry about the delay. If we have any questions, I can take them right now. Let me see if we have any. I'll go to my chat box here, and it says... someone asked for a current chart in the euro-yen. I believe I showed that to you. You would have actually been long from about 3 days ago, and we showed you 3 examples. Wayne is asking, where do we find the DONCHIAN? It's not on any of my 2 platforms. The best thing I think to do is, once again, we provide it for our members. Once you become a member of Specialist Trading, if you have certain platforms, But I would do a Google search, Wayne. Many times you can do a Google search and you'll see free websites which offer the DONCHIAN channels. Okay, so I would do that. I know some of our members have found them for free on different charting software packages that are free on the internet. What is so special about this indicator that the Bollinger Bands can't do? That's a very good question coming from Ahmed. The Bollinger Bands can do this, but what we're looking for is that midline. And the Bollinger Bands, since they're a lot smoother indicator, many times the midline is a lot higher. Plus, you have to have different setting for the Bollinger Bands as well. The Bollinger Bands are a great tool, but we use them specifically for another type of technique as well, finding trend, but with a different setting. So we have nothing against the Bollinger Bands, but you have to have a special setting which we also provide in one of our strategies for our members. This generic setting of 21 period in the DONCHIAN channels is pretty much works for virtually all markets. The DONCHIAN channels you have to format for a lot of different ones. Okay, so I think that's probably the best. Boyke asks, hello Boyke, what is the setting for the DONCHIAN channels? Once again, that's 21 period. And I think we're probably running out of time. I really apologize. We had some difficulties in the beginning. We have to finish here, so we'll see you all next time. Once again, if you have any questions, here's where you would contact us. And thank you so much for attending today and for being participants in the FX Street webinars. We'll see you next time. Bye-bye.